Arkk is an ETF. It specializes in investing in the big technology companies of tomorrow. It specifically looks for disruptive technology companies, and it looks for the innovators that are hopefully going to be the Apples and the Googles of the years ahead. It is worth flagging now for two reasons. In this chart, you can see Arkk in white and NASDAQ via the Qs ETF in yellow. You can see how much Arkk outperformed during lockdowns and the pandemic. But the reason Arkk is often held up as a proxy for unprofitable and speculative technology in general is the fact that it rolled over early in this bear market. You can see here, it peaked at the very end of 2021, and the white line starts rolling over much more aggressively and ultimately led the fall in technology more broadly, the NASDAQ in yellow. The other reason we flag it now is if we look at Quant Insight's model for the Arkk Innovation ETF, what is interesting first and foremost is the model confidence number. 61% currently, a rise of 10% in the last 2 weeks, a rise of 24% in the last month, and just shy of our 65% threshold. That's this green dashed line moving from left to right. Now, to remind you, broadly we can talk about financial markets being driven by two things: macro, inflation, the Fed, the dollar, the big picture stuff all around us, and then micro, which in the case of companies and equity markets means how good is the company's product, how well is it run, what's called company fundamentals, or in the industry jargon, idiosyncratic risks. And down here, while model confidence is in the 30s, then Arkk was being driven by those idiosyncratic company fundamentals. But we may be on the cusp of a new macro regime, i.e. this very important proxy for speculative tech stocks becomes a play about macro, inflation, Fed, the dollar, credit, and everything else. So if and when we cross above that threshold, the key thing to watch will be this red line, which is QI's macro warranted fair value. Basically, where should Arkk be trading given where economic growth is, what inflation's doing, what the yield curve's doing, the broad big picture stuff out there. And you can see that from that December 21 high point that we looked at on the other chart, macro conditions did indeed deteriorate throughout the early part of this year, bottoming around May, June time. But since then we've flatlined. So the real message here is if we see Arkk get back into a new macro regime, then watching this line will give us an early steer on any potential pause but then move lower again for speculative and unprofitable technology stocks, but also potentially a tick higher. And of course, as we pointed out, that could have big ramifications for the broader technology sector, indeed the broader US equity market.